Hi, everyone. This is Arash Adnani with privateplacements.com. With me today, our good friend, Frank Curzio from Curzio Research. Frank, thanks for coming on. How you doing today?
Good, man. Thanks for inviting me, Arash. I really appreciate it, buddy.
Hey, listen, it's we had you on earlier, and it was almost a different age in the market and in this whole Corona season, if you will. A lot's happened since then, and this has actually been a pretty action-packed week. There is a push to reopen the economy. Okay, it's happening in the U.S. You're hearing it and seeing it in the headlines. In Canada, it's being discussed. In Europe, it's being done. What's your take on this push? What are the risks? What are obviously the benefits? We know, but give us your thoughts on it.
We have to open back up. When you look at statistics now, even taking antibody tests and things like that, it's showing that it's more like 0.2% of the population that actually is our death rate, 0.2%. So 99.8 is safe, yet everybody's still staying home. However, with that said, it's very political here. We know it's an election year. Everybody knows that. So November, and it's going to be more favorable if we open up the economy, and the economy does very, very well, which is not doing good at all right now, right? We have numbers compared to the 1930s Great the Depression. But if you're looking at Republicans, they want to open it up. If you look at the statistics, even the states that are not opening up or just pushing that, it's mostly Democrats, right? They don't want to open it up, and it really is when you look at the details of going to salons, going to just social gathering, just different places outside the grocery store. I mean, the numbers are like 5% of Democrats believe we should open, and it's like 45, 50, 60% believe that, theaters, hair salons, and retail companies and businesses should open. So it's a big fight politically. It's all political. At the end of the day, we need to open. I mean, you look at 99% of the population is going to be okay. Older people really need to stay home. People are practicing social distancing. I live in Florida. It hasn't really been on lockdown. There's a lot of people out. I live on a small island called Amelia Island in Florida on the East Coast, but it hasn't been bad here. There's not a lot of infections, but I think we are going to see a rise in infections. I mean, look, you have everyone in their cage, right, Arash? It's like when you let them out, it's just common sense. You're going to see this spread. It's how are we going to deal with this? Are we going to look at it as, hey, it's the flu, it's not a big deal? Or are we going to look at this as a plague where, oh my God, you're going to die? And that's not the case. It's really not the case for the majority of people who get infected. But it is going to be interesting. I think a big test is going to be the NFL. When that opens up, you know as well as I do, you're a huge 49er fan. I'm an Eagles fan. We always talk football all the time. But, offensive, defensive lines are this far apart from each other. They're sweating. They're talking trash in each other's face. You get one person that gets a coronavirus and it spreads, they could shut down the NFL, right? It's going to be very scary. When they open up Disney parks in Shanghai, they're going to open them up next week at 20, 30% capacity. I mean, these things are going to be measured. They're taking everyone's temperature. You're going to be wearing masks. It is a new norm, and it's going to take a while to get back, but we need to have that opening up process and just to see, look, the best cure for this is herd immunity. It's kind of like the flu where, we do have a vaccine for it, but does the vaccine actually work? No, not necessarily. I mean, the number 35 million people got the flu last year and from the 2019-2020 season. And, so the vaccine isn't like a cure-all, end-all. And by the way, when it comes to vaccines, Arash, the quickest we've ever got a vaccine to the market, just to let you know, is 4 years. That was 1967 for the mumps. So for people who think it's going to be less than 12 months, if it is, I wouldn't take it because, I don't know, people don't like taking things. Like if you're sick, you want to take something, right? If you're not sick, you're taking something that could prevent it, but you don't really know the safety issues. If it comes out quick, I mean, there's no control groups on these studies yet. Gilead is making, some good strides, but it is going to take at least 18 months, I think, even though we have much more capacity, a lot of more money pouring into this right now to find a vaccine. But it's not the end all. It's not the cure that everybody thinks it is. And I don't think it's going to come out less than 12 months. Well,
it's so rushed that you kind of feel like if you do take it, you'd be somewhat of a guinea pig. And you certainly don't want that. So this is the thing for me. So I understand the virus is going to outlast the stimulus. Okay. So the push to open the economy, it makes sense. Okay?
Yeah.
But what doesn't make sense, and I believe this is a guideline in the US I was reading last night, the state needs to show 14 days of decreased numbers in positive tests. Okay. That's one of the requirements. based on that figure, I believe there's only 10 or 12 states in the US that meet that criteria right now, right? So the question is, okay, I get the push to reopen. That makes total sense. And I think it needs to be done. But are we ready? Is the US ready? And is this going to make things worse if we're not ready and we're pushing and we're going to find ourselves back where we started, at a worse place?
It is a good question, right? Because nobody knows. Nobody knows, right? So, but I think we have to throw something against the wall, see if it sticks. And I don't mean that where, well, it's going to be people that are dying. There's people that are dying where we're seeing unemployment rates over 20% now. Again, we haven't seen that since the Great Depression. So I think we really need to go out there, practice social distancing, and see how it goes. But I'm expecting us to go out there. I'm expecting to see another wave of this. I'm expecting to see more closures, but I think that's going to be the process, because what are you going to do? You're going to keep everybody home forever. This is starting to get really, really crazy. Not just for your psyche. I mean, it's not just, business, the economy, people losing jobs, but, I'm home. My wife's home with kids. I have an office and I'm here by myself, which is cool, but most people are home and they're dying to get out. I mean, they're dying to get out. They're sick of this. People aren't even really watching the news anymore because there's nothing that's going to surprise them about the coronavirus. It's the same thing over and over and over again now. It's just, you're watching certain programs to the left and they're telling you, you're going to die if you go out. And to the right, they're like, you're perfectly fine if you go out. We need to do this. So it's very confusing times, but only time's going to tell, right? I mean, if you look, and I don't mean to give you an answer like that where nobody knows, right? Everybody likes to get an answer. Everybody hates when you're on the fence. But I can tell you this. Andrew Cuomo, governor of New York, was saying how New York, we have an arrogance to us and we're going to be perfectly fine. I mean, you look at what these guys, you look at Dr. Fauci, who's, I've never seen someone so liked on both sides of the political spectrum. 100% wrong. This isn't even going to be big in the U.S., going to be fine. I mean, all these guys, and I'm not picking on the president, said the same thing. It's not political. And with Andrew Cuomo, like, hey, we're going to be fine. We're better than countries. New York has more infections than any other country. So these guys have been so wrong, but they're trying to save lives, right? We're going with it. We're learning about something that's never happened in history. Yes, we've seen, similar diseases, but we never had total lockdowns where, okay, when do we go back? So there's no easy solution, right? There's no all right, if you go back, it's going to be fine. If you wait, it's going to be fine. I think there's a medium there where the states that you mentioned, unfortunately, the 10 that are seeing that, 14-day restriction are the least 10 populated states are pretty close to that, right?
No, one of them, New York's actually stabilizing. Interesting.
Oh, but for 14 days,
yeah.
Right? So they got to stabilize for 14 days. So the ones that stabilize for 14 days right now are like, those, I don't want to say that.
It's like Wyoming, places like that.
Yeah, like Kansas and things like that. But, for the major economies, we'll see. And we're going to be tracking this. And we want to make sure we do practice social distancing. And I have to tell you, I've interviewed people on my Wall Street Unplugged podcast in Italy on a lockdown and in China. Their lockdowns are no joke. I mean, their lockdowns are, when you go into that country, when you go into China right now, you're quarantined 14 days. WeChat, they have, different codes on that. So it's green is okay, yellow means you should be in quarantine, and red means you have the virus. And if you are in quarantine, supposed to be in quarantine, and they find that out, they track your phone and see everyone that you met, and they put everyone on quarantine. Everybody's wearing masks. I mean, you get off the flight, they put a hazmat suit on you. Where here, it hasn't been like that at all. So for us to compare to China and, hey, they did it right, our lockdown is nothing like their lockdown. I mean, they're going into they're taking their temperature when you go into grocery stores, when they're walking around, they're wiping the boxes as you touch them. We're not seeing anything like that. So it is going to be interesting where we can't look at China as, hey, look what China's doing, they did it right or whatever. Again, they lied about a lot of statistics, but I just can't see this thing not spreading. But I do think that's part of the process where we're going to need a herd immunity. That's the easiest cure-all for this, or to really lower statistics. But we'll see when it opens.
I think, listen, like places like China where you got the iron fist sort of ruling, at times like this, it helps because you're hearing one singular voice and message.
Yeah.
In Canada, provincially, we're being told, hey, go outside. It's actually better than staying inside. Yeah. Federally, Trudeau's saying, no, stay inside. So what do you want people to do? Like, do you wear a mask? You not wear a mask, right? Yeah. Luckily, like the businesses are managing it well, like the wipe down, things like that, it's happening. I think what you said makes perfect sense, where you kind of have to like see what sticks, right? We can't stay in shutdown forever. We got to start opening it up little by little, see what works, what doesn't. It's almost like when you brew that first cup of fresh coffee and you're trying to sip it to see if it's still too hot or ready to be enjoyed. It's kind of like that. It's kind of like a bit of a game of give and go. Now, you touched on something, which was the unemployment rate. Yesterday, Airbnb announced, I think it was a quarter of their workforce being laid off. Uber today announced, I think it was 14, 15, 17% layoffs, massive numbers. I think the US numbers are being announced this Friday, right, for unemployment rate?
Yeah, well, the unemployment rate, yeah. So it's, yes, the first Friday, yep.
And it's expected to be quite high. But yet, you're looking at the market, and we're talking about this earlier, about the stock soaring and then the market's doing so well. Where's the disconnect, right? You see one thing on this end, and then on the other end, you're seeing nothing but green.
The disconnect is really, it comes from stimulus, right? Because you said something before about, the stimulus, the virus will outlast the stimulus. I don't know, because I think we're going to have stimulus for a very, very long time. When we have our government saying whatever it takes, that's pretty scary. Whatever it takes means that everybody who is going to try to get a piece of this pie. It means that businesses, small businesses who don't need to apply for the loan, like we've seen, applying for these loans. You have Harvard that got it. Oh, let me give it back because of the backlash. You have Shake Shack. I mean, Ruth Chris Steakhouse, right? Everybody's going to apply.
Just seeing if we could get it.
Yeah, let's just see if we can get it. Oh, we got to really, and they have algorithms set up where they're like, the president, as soon as he finishes signature, boom, they got accepted, right? It's like, 1 millimeter per second, whatever it is. But, I just think it's kind of funny. But even on unemployment, there is actually people making more money on unemployment than they were working.
Yeah.
What message does that say? I mean, there was a good story in the Wall Street Journal saying, hey, this one company's like, hey, want to bring everyone back. They're like, no, we're okay right now. I'll stay home and make more money than work and make less. So, a lot of this stimulus is just thrown out there where, I mean, it's $700 billion just for small businesses. To put that in perspective, TARP was about $450 billion. It started at $700 billion. They only used $450 billion to save the whole financial system from collapsing. $700 billion. A lot of this money is not going into investments where the government has equity stakes, which was a good thing because they made money on almost everything they invested in early. As as a taxpayer, it's nice. They're handing checks to people, and what are they doing on unemployment? They're paying their bills. So there is going to see demand, of course. We're at zero almost, and now all these countries are opening up. You're going to see 20, 30, 40%, but we have a market trading at 24 times forward earnings for the S&P 500. To put that in perspective, it was trading at 19.5 times forward earnings pre-coronavirus. What does that mean? Well, it doesn't mean we're going to see a V-shaped recovery, which some people are predicting. It means that they're expecting 1 year from now that the U.S. is going to have the best conditions in the history of our nation, right? So it's one thing to say, oh, well, you think we're going to go back to normal. No, we're close right now. We're not saying that based on where things are trading. I mean, if you're looking at some of these companies, Disney reporting, horrible. I mean, suspended their dividend. They asked them, when are you going to make money on streaming? We have no idea. They removed their guidance. We don't have enough money to expand Hulu International, with liquidity mode. We don't even know when we'll open up a park. Shanghai's opening. We don't know how we're going to do it here in the U.S. And it's trading at 43 times forward earnings. Its highest valuation, I want to say, in at least 30 years, probably maybe in its history. And the stock went up on that news. The stock is up. So when I look at things like this, there's just so much anticipation that things are going to be great 1 year from now. And I just don't see that. I mean, you look at planes, you look at casinos. Casinos are limiting the amount of people who can play poker, who can play craps. They're taking out slot machines, right? That's less revenue. Restaurants have to take out 10, 15% capacity to practice social distancing. I mean, 15% difference in revenue at restaurants and bars is the difference between these guys going bankrupt and staying open. So to say it's going to go back to 100% is crazy. To say it's going to be even better than that, expectations are very, very high right now, and that worries me.
So, I mean, to summarize, things are going to get worse.
Well, you know what? No, not necessarily. Things are going to get better, right? Because we're at zero now. I mean, you're looking at unemployment. Yes, companies are going to get back to, we're opening up, right? So, on the economic, we're going to get a little bit better. But we're pricing in that things are going to be more than better than they were pre-coronavirus.
We're setting up for disappointment.
Exactly. We're setting up for disappointment because, of course, we're going to see the numbers get better, but are they going to go back to the pre-existing numbers? I mean, when you look at Google trading at 30 times forward earnings, they deserve that multiple when they were growing search by 20% plus. They grew only by 8% plus, and everybody across the board is cutting their marketing budget. Yeah, more offline than online, but still, people are spending less money. People are cutting CapEx across the board, 20, 30%, right? They're in savings mode. And as well as I do, you own your own business. If you cut marketing, you cut CapEx, you're not going to generate more money than you did the previous year, right? You're cutting those expenses. So to say that things are going to return back to normal, expectations are very, very high for everything to be perfect. And I'm just on the side that I don't see things being perfect. And there's pockets out there that are very expensive, and also pockets out there that are worth buying.
Okay, so worth buying. I know you're a believer in the airline stocks.
Mm-hmm.
They've been getting absolutely killed.
Yeah.
And not just in the U.S., by the way, and in Canada as well, Air Canada, across the board. So let's talk about opportunities, right? There's a lot of stocks where I think investors missed the boat on, right?
Mm-hmm.
Where's the opportunity right now? Like, would you look at airlines at these numbers? Would you look at other stocks that are still in the red and still getting slaughtered?
I like airlines, and listen, Buffett got out of the airlines. I don't know if he's the best measure of someone who, again, he's the greatest investor in the world, a legend. But Buffett selling out over this weekend was old news. He lowered his percentage below 10%. The reason why you do that is because if you're over a 10% owner in the U.S. and you buy or sell, you do any transactions, you have to report that in 2 days. And that's what he did, because he brought those airlines under 10%. That told me that he was going to sell out of most of his position, of all his position. He did this about 3-4 weeks ago. Why is that? Because when you're under a 10% position, you can sell out of your entire position and you only have to report it in your 13F at the end of the quarter. So that would be around July, August. So to me, it was no surprise he was out and airlines took a hit. But if you look at airlines, I mean, Arash, can you give me one risk that's different from anything you don't know? I mean, yes, they have liquidity problems. They all reported earnings. You have a lot of the bigger names, the Southwest and the Deltas, that are fully cashed for the rest of the year. Capacity is down 90%. Is it going to get any worse? No, I don't see it. People are buying casino stocks here. How do you get to Vegas? So I mean, if you're really starting to buy travel stocks or the Expedias and things like that, some of these names are catching a bid. Those are all fueled by airlines. So when I look at airlines, the downside could say if we stay at the capacity is an increase, right? It stays at 90%. Well, they only took $25 billion from the government. They got another $25 billion coming. And then this is an industry where these guys did things right. Even Buffett said that. I mean, these are management teams that bought back stock when they were trading at single-digit PEs. I mean, if you're ticked off at that, you should be ticked off at 90% of the S&P 500 companies who decide to buy back their stock at 15, 18, 20 times PEs. I mean, that's what Apple did, right? Just announced a 50 increases their buyback by $50 billion. Do I want Apple really buying their stock back at 23 times forward earnings? It's one of the most expensive valuations in 18 years. I would think that you could do other things with that, but that's a way where Apple's going to get their earnings up because they saw no growth. Apple saw zero growth in revenues and earnings from 2018 to 2019. They had a high multiple because 2020 was supposed to be great. Well, now the coronavirus hit. Now you're probably going to see earnings decline in 2020, and they're not going to be that strong in 2021. So do they deserve that huge premium? No, I don't think so. So, there is money going to these large cap names, and I get it. I understand that they do have good balance sheets. But, when it comes to the airlines, I just think a lot is factored in. I think the government is going to back these guys. I mean, it is a necessity. Yeah. And the upside, if these things go back to, say, they're at 10% capacity, they go to 20, 30, 40% capacity, which I think we could easily see as we open up, everybody's opened up these lockdowns. These things could really pop from here.
Which ones do you like out of the airlines?
Just two of them. I like Delta and Southwest. Those are the two best names. Those have the best balance sheets. Those are the most well-run companies. Mm-hmm. And they're so good that there's actually warrants that need to be given to the government that they're not even doing that with the government because the balance sheet's a little bit better than the other ones. But these are guys that got, I think it's Southwest got close to $1 billion and Delta got close to $5 billion. It's a 10-year loan. The first 5 years is 1%. Next 5 years is 2%. I mean, that's pretty cool. And they even said, Delta said, we might not have to even use it, all of that loan. So, I just think from a risk reward standpoint, as a speculative trade, I like them. It's just surprising to see like the casinos are getting getting bids, and other places within travel are starting to get bids. But the airlines aren't. They're down 65, 70%. Really, a lot of this risk is priced in with these things over here. At these
what else do you like for the travel tourism space other than the airlines?
I mean, you know what? The cruise lines are really tough. You're looking at the Expedias and the Bookings.com, which is Priceline. Those guys were generating so much fees off of hotels. I think, you really have to look at the hotels individually to see which ones. I mean, they're all going to come back online at the same time. I think there's going to be a lot of separation within these industry. Like Norwegian could be in more trouble than Carnival here. So it's hard to say right now. I mean, there's a lot of speculation in these industries. Expedia cutting announced that they're cutting their marketing from $5 billion to $1 billion this year, which is pretty crazy. So yeah, you know what? I don't know where these things are trading right now in terms of. I don't know if all that risk is priced into all these names because some of them have run up. It's just the airlines haven't. So for me, I like the airlines here. The casinos are going to be tough. You're going to see much less revenue, but we're in a growth market. We're trading at a massive growth multiple where, we're not going to see really any strong growth this year. It's going to be down considerably from last year. So, some of these things have run up a little bit, but I can't find myself outside of the airlines because they're just down so much. And you have I don't know if the cruise lines are going to get backed by the government. You're not too sure, but I don't know if I'd venture any place else within the travel industry. It's kind of dangerous right now.
What else do you like? I mean, with Disney, Starbucks announcing they're opening up, I think 85% of their U.S. shops by end of the week. Mm-hmm. Is there some value to be gained on these safer stocks?
On the safer stocks, yeah, but you also have to worry because you said something about missing the boat. And Chipotle is a good example because they're doing everything right. It's awesome. They deserve a huge premium. They're trading 85 times forward earnings. Chipotle came out and reported their quarter 2 weeks ago, and they said that online sales, digital sales, are up 85%. They increased like 85% or 85% of their orders. I go to Chipotle. I love it, and I used to just show up there, right? So it's takeout because all the restaurants are closed. But when I called it, they said, no, you have to use our app to order, right? So, of course, digital sales are going to be up. Doesn't mean that overall sales were up because same-store sales, a big measure when it comes to restaurants, they were growing at 30%. Then they came down to the expectation of 13%. They only saw 3% growth in same-store sales. So 3% growth. And the stock is trading at near its all-time high. So if that's the case, maybe they should hope the coronavirus lasts forever and their stores remain closed forever and just take out, which doesn't make sense. But when I'm looking at this industry, you want to look at some of the winners where, online operations are improving. These companies are going to be more lean than ever, right? Because they're being forced to cut costs, which is really good. So, I'm bullish longer term. I can't believe the move that we've seen with so much uncertainty over the next 12 to 18 months. I just don't see it. But, in the restaurant names, again, I'm just being very careful. A guy like me, I look at fundamentals like the technicals. And when a company comes out and says, well, we have no idea what we're doing. We don't know. We pulled our guidance, so it's like, if you don't know what you're doing, it's hard for you to go in there and buy these companies when they're just trading 30% higher off their lows, when the management teams don't even know what they're doing. And a lot of these guys aren't even buying their stock, and insiders aren't buying here. So.
Okay, listen, so I'm sitting here in Vancouver. Mm-hmm. Canada, as you know, is all about the commodities, gold, oil. What's your take there, and what's been happening with either commodities or anything else that you're following right now?
I mean, two of the best areas, because right now investors are confused. I'm confused. I'm a 25-year vet, right? I mean, when you're seeing things trading at 40, 50 times earnings and not expected to grow for 18 months, it just doesn't make sense, and these things are running higher. What does make sense is we're going to see every government, every central government around the world continue to spend a fortune. Europe was a disaster pre-coronavirus. They were just about in a recession. China was a disaster, seeing much slower growth pre-coronavirus. So you're looking at those markets, not just the U.S. spending trillions, and we're up to $3 trillion. It's going to go easily to 5.5. That's about 25% of our GDP, easily. They're just going to keep spending. So, the conditions for gold have never been better. And if gold doesn't go higher now, I feel bad for those gold bugs who've been saying, the end of the dollar since the 70s, 80s, and 90s. I mean, if it doesn't work now, man, just give up. But, the guys I'm talking about. I love them. I meet at conferences all the time. I see them at conferences. A lot of them are my friends. But in specifically with gold, I would be careful of, I think, everything gold related. So if we separate in three categories, like the junior miners, the majors, and the royalty companies, they're going to go higher as gold goes higher. I think gold's going to easily go past $2,000 an ounce. But if you notice, the royalty companies have done great because these are growth companies, right? These are finance companies that got great deals when the industry was terrible and they were able to take a piece of good projects. They're having trouble finding good projects to invest in. So I would be selling those or taking profits in them. And I think the majors are going to see huge growth. Again, this is if gold goes higher. They're all going to go higher. It's just a matter of who's going to outperform. And I think it's finally time for the junior miners. I mean, a lot of these projects, some of them were not economical. If you're looking at biotech, when you go from a company that's kind of worthless and then you get phase 1 approval, you see almost the biggest gain. You'll see a stock go from like 30 cents to $3. And then phase 2, you'll see it go to $6, $7. And phase 3, believe it or not, if you pass phase 2, it's kind of like assumed that there's a good shot I'll pass phase 3. It's just a bigger study in safety, efficacy, and stuff like that. But the junior miners, a lot of these companies, weren't economical with gold at $1,300, $1,400 an ounce. Now it's $1,700 an ounce, $1,700 an ounce. A lot of these projects and their studies, PEA studies, are all based on $1,250 gold prices. Now, when you raise them, a lot of these things are now economical, where they could be bought by the majors. The majors' balance sheets are fantastic. They all consolidated, like the oil companies, Exxon, Mobil, Texaco, all those companies. The Chevrons merged. These guys are big players. They got huge war chests, and I think you're going to see a lot of M&A pick up in the junior miner space. So out of those three areas, I would do junior miners and majors, and probably take profits in the royalty companies, because it's hard for them to find those streams right now that makes sense. It was easy pickings a couple of years ago. And the last thing here is Bitcoin. I mean, Bitcoin's very easy to buy. You can go to Coinbase, just own a little bit, but Bitcoin was created for this, and you're seeing a real bid on the Bitcoin over the last month or so. It did take a hit initially, but now we're pushing closer to 10,000. This is a widely used alternative currency, especially internationally. And I think this is going to be the catalyst that really pushes this much higher. And I think you can get much bigger gains on Bitcoin than gold. And it's not that difficult to buy now. It really isn't. I mean, I have nothing with Coinbase. It's very easy. There's so many different areas, so many different ways you could buy Bitcoin. But right now, this is a prime market for gold and Bitcoin.
I like that you say that, because it just makes me laugh when people make it sound like it's either gold or Bitcoin, and you got the gold bugs and Bitcoin guys arguing over which one's better. And it's just, well, if you believe in that theory, then you should be buying both. On the gold topic, are there any gold juniors that you're buying right now that you like?
So the gold juniors that I like, I mean, there's companies that I would avoid. I'll go over the first ones that I would avoid a little bit. There's companies that are still going through permitting processes. Companies like, I won't mention any names because I'm friends with a lot of the CEOs of these companies, but I would avoid anyone that's having trouble getting permits and you're expecting that, or any companies, any juniors, just environmental concerns and, just when it's politics, because why take on that risk when almost everything's going to get higher? So I would really focus on bigger companies here, like the ones that have, good projects, good assets. I mean, On Resources is one name. Gold mining, which, is your brother, and I'm going to mention that because your brother, he's a good friend. It's, your brother Amir has put, gold mining on the map. And he said, look, when things were terrible 7-8 years ago, we're going to buy a whole bunch of gold projects. Everyone thought this market would bounce back a few years later. It took much longer than expected. Now you have gold prices through the roof, and a lot of the projects that he had, which, some of them were uneconomical, and said, it might take years. I don't know if any, now they're all on the map. Yeah. So you're looking at great companies with good assets, in good jurisdictions with good management teams, and companies that are flush with cash, right? That's why I'm looking at junior miners. If you could find that, it's not that difficult to find. You'll find a good 10% of them, 7% of them, but those are names I'm really focusing on.
Okay. That was, we're gonna follow those and see how you did next time we talk. Hey, I know we talked about Disney. Disney owns ESPN. ESPN produced one of our favorite quarantine time entertainment pieces right now, The Last Dance, which is a documentary on the Chicago Bulls and their final championship. Mm-hmm. What's been, you're a big sports fan. I'm a big sports fan. We've obviously watched those teams and that Bulls dynasty. Mm. What's it like for you rewatching that now and kind of re-experiencing that joy of seeing MJ and that Bulls dynasty?
I think the best part is the old school rap, right, that they have in the background. I forgot all those songs. I'm like, wow, these songs are so great, old school rap. But you forget how great, and I played basketball for 30 years. I still play today. In part, like good 15, 20 years, that was my life. So, growing up with Michael Jordan, it was amazing. But there hasn't been a lot documented on him in the last 10 years, right? So, they did create a lot of specials before that we've watched and, Fly By Me, whatever, all the Jordan. But you kind of forget, right? You look at LeBron and Kobe's and say, wow, these guys are great, man. The LeBron, maybe he is better. And then when you remember, you go back and you see, you're like, whoa, who was I thinking? Because this is a guy that just dominated everybody. I mean, you look at the greatest names. You look at the Patrick Ewings. You look at the Karl Malones, John Stocktons. You look at Gary Payton.
You're such a New York guy by mentioning Patrick Ewing.
But he stopped all these great players, the Charles Barkley's, from winning a championship, all because of Jordan. Like all these guys, he didn't care. He's like, I'm beating you. That's it. You're done. And It was his entire life. I mean, it's just, you never seen someone that dominant before. And I remember those games, man, when they would just, they would just give him the ball. Like even Pippen was like, here you go, at the end of games. They would be losing for 4 quarters, and then he'd hit 2-3 shots and win the game at the end like it was nothing. It's incredible to bring back those memories, and there's still another 4 episodes I'm looking forward to.
What's crazy to me is how they had already decided at the beginning of the season to blow up that team at the end, and they just decided that we're going to end this dynasty because of egos, whatever you want to call it. But what's even more impressive is that with all that drama, all that turmoil, all that bickering with the front office and the team and the players, they still managed to win. The amount of focus and just grit and determination you need to have as the players, really, I think that's on them. To pull that off, absolutely incredible.
It is incredible because when you do win a championship, that desire goes down. I mean, it's just normal, right? Just a little bit. And
especially on the 3rd year.
On a 3rd year, and then you're out for 2 years, 3. And that's why when you look at Tom Brady, I mean, that competitiveness. I mean, listen, when you talk to Brady, there's people that hate him. When you talk to Jordan, a lot of people, I mean, everybody respected his game, but these are guys that are not nice. These are guys that take this seriously. They're going to step on your head, and it takes a certain type of athlete. I mean, even Kobe Bryant I put in there as well, who just completely dominant, and you have to have respect for those guys. I mean, they don't know how to lose. They just refuse to lose, and it's kind of really impressive just to see it year after year after year to get that motivation. It's incredible. It really is incredible.
All right, let's hear what's Frank Curzio's Mount Rushmore of basketball?
Mount Rushmore basketball. That's a good question. I think you got to put LeBron there. I mean, what was it, 7 championships in a row that he made with 3 different teams? And he's incredible, man. If you look at his performance in late games, in championships, he's been fantastic. So Jordan's on there. Wow. I wish I got a chance to see some of the old school guys play. But the other 2, wow. Oscar Robinson. And you know what? I don't know if I can name another one. I mean, Kobe, 5 championships. He's not even mentioned in the top 10, some top 10 list. How is he not mentioned 5 championships?
Oh, that's just silly.
It's silly, right? So, and again, this is more, 80s, 90s, where if you're looking back, I mean, God, there's so many players. Would you put Wilt Chamberlain on there? How would he play now? But those are the 3. I don't know if I can name the 4th one because it's just, I think those 3 would have to be on anyone's list, to be honest with you.
Just sounds like you don't have any love for the West Coast guys. I didn't hear Magic. I didn't hear Kareem. By the way, I think it's complete disrespect that Kareem Abdul-Jabbar is never mentioned.
He's not
in the GOAT conversation yet. Yet the guy is still the leading scorer all time. He had the most unstoppable shot. Skyhook.
You're right. Yeah,
gets no respect.
You're right. But with that said, would he have won as many championships without Magic? I don't know.
But would Jordan have won without Pippen?
Without Pippen, you can go there. Yeah. You know what? Magic is definitely on that list. You know what it is? When I look at Kareem Abdul-Jabbar, I look at Shaq. Like, if he had to cover Shaq would just throw him into the stands and dunk on him 40 times in a row. So and Wilt Chamberlain, like, how great was he? Because he was like 1.5 feet taller than everybody else on the freaking court. So it's hard to compare guys.
But what you're forgetting is that Kareem, as a big man, was extremely skilled. So he wasn't just like a strength guy like Shaq.
Incredible, yeah.
And he was actually the modern player that most, to me, reminds me of Kareem as Hakeem.
Yeah.
He was a big guy, but he had like the footwork of a guard. You know what I mean? And and Shaq couldn't stop Hakeem. He tried.
You're right, Andre. Like, I'll be honest with you. If you told me I had to take one big man at that prime, who would it be? It would be Hakeem.
All right.
I'd take Olajuwon.
All right, so you're adding him to your Mount Rushmore.
Oh, Olajuwon, that'd be tough. That's so controversial. But yeah, I'll add him there. If I had to add a center, that's the guy. I think he would outperform. I mean, he was just incredible. Olajuwon was amazing, just unbelievable. Timing, jumping, blocked the shots himself, 2 championships. He's incredible. I would put him there before almost any other center. I think maybe Oscar Robinson, but yeah.
All right, I'll check up on you next time, see how you're feeling.
I'm gonna get more for that Mount Rushmore than any of my stock picks today.
Hey, really quick, tell us about that bottle of wine you have there right behind you.
Oh, this is so a friend got this for me, Eagles Super Bowl. I actually went to the Super Bowl. Best Super Bowl ever because I'm an Eagles fan. But it really was a good Super Bowl. I mean, it was no defense, all offense. It was just incredible. Just see people just bawling and crying. We couldn't believe that we actually won. But yeah, I got that made. One of my friends got that made, sent it to me. So yeah, we'll see. This year's gonna be a little tougher. NFC East is really tough, but no, thanks for asking. That's really cool. One of the best moments, man. I'm telling you, it was amazing being at that game.
Awesome. Love it. Frank, thanks for your time as always. Hope to see you soon and good luck out there.
All right, you too, buddy. Thanks for having me on.
Okay. Thank you.